we were just playing with different types of inflation. And there was one number that a real all-time high was going to be over $12,000 an ounce. It's not a prediction. It's not a promise. Please don't put that in the clickbait headline. But there are ways of looking at adjusting gold for inflation that would call for that. And it's interesting that, a 4-digit number like that coincides with math like you're talking about that some of these people have done. Like if you wanted to back all the dollars in existence with the gold allegedly at Fort Knox, it would take something north of $10,000 an ounce to do it. Right. So it's interesting that kind of aligns.
World Gold Council data indicate that gold has a long-term positive correlation of approximately 0.6 with inflation over a 50-year period. However, short-term links vary in relation to interest rates and market sentiment. Interestingly, the strength of gold's correlation with inflation has evolved throughout different economic cycles. During the stagflation era of the 1970s, gold prices rose by over 1,500%, far outpacing the high inflation of that period. In contrast, during the low inflation environment of the 2010s, gold's performance was more closely tied to real interest rates than to headline inflation numbers. Veteran resource investor Lobo Tiggre avoids setting price targets, but notes inflation-adjusted valuations could justify gold well above $12,000. Tiggre finds it remarkable that serious discourse now includes revaluing U.S. gold reserves to strengthen national finances, something once dismissed as fringe. Nearly 4 decades later, in 1972, as the Bretton Woods system began collapsing, gold was revalued from $35 to $38 per ounce. This was followed by another revaluation in 1973 that set the official price at $422 per ounce, a figure that remarkably remained unchanged for over 50 years. While reflecting on fundamentals, Tiggre cites a correlation of over 90% between gold and the M2 money supply, tied to the dollar's steady debasement since 1971. While last year's gold rally was strong, Tiggre warns it may not repeat. Since late 2023, however, the U.S. M2 money supply has resumed its upward trajectory. This renewed surge is one of the key drivers behind gold's powerful bull market during that time. It underscores a broader truth. The long-term direction of the money supply is relentlessly upward, with pullbacks being both rare and short-lived. Ultimately, Tiggre discusses his outlook on the 4 horsemen metals gold, copper, uranium, and silver. He remains bullish on all, while highlighting gold and uranium as his core win-win portfolio for 2025. Before we dive into Lobo Tiggre's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the markets. Let's get into it.
I mean, I have to say, nobody's more pleased than me to see the hockey stick last year. I had for 23, my highest confidence trade was actually the other yellow metal, uranium. That worked out really well. For 24, it was gold, not uranium. That worked out really well. Uranium went into reverse, and we know what gold did. And I'm still a gold bull. All the reasons for gold to go up are still there. And, I wouldn't say so much this time is different, but actually, if you pull back and look at the big picture, if you look using the government's own statistics at the purchasing power of the dollar, this long curve down since 1971, and you look at the gold dollar exchange rate, I think gold is money. So I really object to calling it the gold price. I call it the gold dollar exchange rate. It's a Forex question in my mind. And it's going the other way. If you look at gold versus the purchasing power of the dollar, even using CPI, it's a giant X over the last 70 years. Sorry, 50 years. And there's other measures. So if you look at the big picture, just look at M2, for example. If you plot M2, cumulative M2 and gold, the gold wiggles more, there's more volatility, but the lines, it's very clear that they're, let me put it this way, the correlation is over 90% or 0.9 if you want to be precise. That's a very high correlation, and which reminds us of Professor Friedman's dictum, right? Of always and everywhere a monetary phenomenon. These things being the case, it seems to me that there's an argument for just don't fret the noise, the near-term noise and the volatility. You debase your paper currency in anything real like gold or silver or even, copper, right? It's going to go the other direction because you print more of the fake stuff and it's going to take more of it to buy the real stuff. There's no surprise there. It's when you get into, shorter term comparisons, and then you get into trouble, or hoping, what do I do this year? What's it going to do this year? The answer to your question is, we got a hockey stick last year. To ask for another hockey stick this year was a big ask. So it's not that I was bearish. These big picture things that I'm talking about, it's all there. It's all bullish for gold. But we got that hockey stick last year. So, I'm bullish on gold, but I can't say it's dirt cheap, Right. And by the way, if you look at a gold chart adjusted for CPI, and I know that CPI is a CPI and all that stuff, but still, it's the number we have. If you adjust for CPI, the 1980 peak in gold is around 3,500 today.
Right.
So isn't it interesting that it hit that level and then backed off? Okay, let me come back. I'm addressing the four horsemen here. So I like gold a lot, but it went up so much last year. It's hard for me to say, ooh, it has to keep going, right? Mm-hmm. I like copper a lot, but with the Trump turmoil, it's Dr. Copper responds to economic unease. So that's not an immediate one. But because of the money helicopters we were talking about before, this is all highly inflationary. Copper is necessary for basically everything. So I'm extremely bullish on copper, after the kerfuffle. So there's gold, there's copper, uranium I like a lot, but we are, as I say, in this space of seeing whether, high prices cure high prices or not. And then silver, which is still a monetary metal, but it does have very obviously, measurably, and sorry, people, silver bulls get upset with me sometimes, call me Darth Silver and all that stuff, but it clearly has a much larger industrial side than ever, and that weighs on it. There's times when you see it, it's just tracking copper and not gold. That happens. Now, the good news is that I'm bullish on copper and gold this year. So for me, that's a no-brainer. Of course, I like silver, but it does make me less in a hurry to rush out and buy any silver stocks today, because if gold is kind of, trending sideways and copper is going down because of the next Trump shock, I suspect that silver will be under pressure until that clears up. Ultimately, I'm bullish on all four. And now the answer to your question you jumped in with, the win-win portfolio for me for this year is actually gold and uranium, the two yellow metals, because if things go bad and things get scary, and there's a flight to safety, safe haven assets and things like that, that clearly benefits gold. That might not be so great for uranium or any industrial minerals, depending on how that plays out. So there's, but my gold will make me proud. My gold stocks will pay me. If it goes the other way, I'm wrong to worry about, the difficulties of getting Putin to the negotiation table or any of these other things that I worry about. And things calm down, and Trump's tax cuts and his deregulation just produces an immediate, not eventual, but an immediate boom in the US economy. Well, my copper will do great, but the uranium will go nuts. And maybe the gold, maybe people won't feel the need for safe havens so much. So maybe my gold stocks will underperform, but my uranium stocks, they should go through the roof. And my base case is actually for both of them to go up, both yellow metals, by the end of this year. But if I'm wrong one way or the other, then one will go up and it'll hedge me against losses on the other side. And I'd honestly, believe it or not, maybe gold bug likes gold isn't much of a headline, but I don't see a scenario. I'm looking at the possibilities in front of us. I don't see a scenario where uranium and gold go down. Like what would do that? What would make people feel calm and everything's great, so we don't need safe havens, but we don't need abundant baseload power either. Like I don't see that scenario. So I either make money on both, which is what I'm actually betting with my portfolio right now, or one of them hedges me against the other in case I'm wrong. I'm happy just to get the direction right. So I never give price targets. But as we mentioned, if you adjust for CPI, 3,500 was an all-time high. So that was potentially a resistance level. And that doesn't mean that that's where it should go. It means, like, if you believe in any technical analysis, that if it breaks through that, sky's the limit. And if it bounces off that, that's maybe bad news. But that's CPI. If you use shadow stats, it's like twice that high. I don't even want to say that out loud, right? But it's huge. And there are numbers. I forget which one we used. We were just playing with different types of inflation. And there was one number that a real all-time high was going to be over $12,000 an ounce. It's not a prediction. It's not a promise. Please don't put that in the clickbait headline.
Mm-hmm.
But there are ways of looking at adjusting gold for inflation that would call for that. And it's interesting that, a 4-digit number like that coincides with math like you're talking about that some of these people have done. Like if you wanted to back all the dollars in existence with the gold allegedly at Fort Knox, it would take something north of $10,000 an ounce to do it.
Right.
So it's interesting that kind of aligns. And another interesting thing is there's talk out there, which somebody even asked Scott Bessent about this in an interview. And, it's not just the auditing of Fort Knox, but Trump himself said, well, it'd be difficult to go back on a gold standard, but wouldn't that be great? For a president of the United States to even say that is pretty jaw-dropping. But the interesting idea here is that if you do allow gold to hit its real price, and then you revalue the gold reserves in the United States, you maybe don't completely fix the United States' balance sheet overnight, but you make it a whole lot stronger, just like that. So for all these decades, the central banks have been the enemy. The Fed has been the enemy of the gold bug, right? They're suppressing the price of gold. The government doesn't want people to know how worthless the fiat currency is, so they're suppressing the price of gold, all this stuff. We could actually be in a world where they want gold to go up so they can revalue the reserves. And then suddenly the balance sheet looks better. The U.S. gets its AAA rating back again, and everybody lives happily ever after. Or at least, I'm not sure that they can do that. I still think there's too many people who don't want to admit how far the dollar has fallen. Because if you do that, you're admitting that a dollar is not 1/3000th of an ounce of gold. It's 1/30,000th of an ounce of gold, or whatever it is, right? That's a huge admission. And I have a hard time thinking that the powers that be would really be okay with this. But it's an interesting thing that this is actually in public discourse now. This isn't a libertarian tinfoil hat theory. They're asking the Secretary of the Treasury about it. And he's saying, well, that's not my idea, but it's out there.
Regarding the Trump shock, Lobo Tiggre draws a parallel to the 1971 Nixon shock, suggesting that Trump's agenda goes beyond tariffs or trade fairness. He argues Trump is attempting a structural transformation of the U.S. economy, reindustrializing it with a focus on military-adjacent industries, forming a kind of fortress America. This shift could reverse decades of globalization and services-led growth. The Senate's proposed tax bill compounds this shift toward unilateralism by trying to replace income tax revenue with tariff revenue, a move endorsed by Trump himself. The U.S. is doubling down on protectionism as a cornerstone of fiscal policy. This approach mirrors Nixon's willingness to disrupt global systems for domestic gain. Both Nixon and Trump share a common thread, prioritizing domestic political objectives over international stability. For Nixon, it was about curbing inflation and unemployment. For Trump, it's about leveraging tariffs to boost revenue while cutting taxes. Concurrently, Tiggre believes the consequences would be as profound and disruptive as the move off the gold standard under Nixon. Let's get back to the interview.
So the Trump shock thing is obviously a play on Nixon shock, and that's deliberate because I think, watching him now, the mantra on the mainstream media is that you have to take Trump seriously, but you shouldn't take him literally. And there is a grain of truth in that. It's not knocking on Trump here. It's just, at best, he's such a TV performer speaking to various audiences that it's difficult to square all the things he says with each other and what he's doing. And, a lot of people just say, oh, it's all chaos. But if you look at what he's doing and what the executive orders call for, the overall pattern in the actions is pretty consistent. And it's not really about tariffs or fairness in international trade. He, it seems to me, is really trying to change the basis of the United States economy. He's trying to reverse decades of history and stop the United States from being a so-called, consumer-driven economy or services economy and make it an industrial economy again. Now he paints pictures of, blue-collar workers, with their quality jobs like back in the 50s or something. That's obviously never going to happen. These new factories are going to be full of robots. So, if you want to work at one of these new factories that's getting built, you better be studying robotics, not going to shop class to learn how to operate a drill press or something.
The lathe.
That was fun. At RPI, they had lathes that anybody could use for milling iron and steel, not just wood. You could go in there and make anything you wanted. Anyway,
Mm-hmm.
I love that stuff, but I wouldn't bank on that as a career. And that we don't want to get down the AI rabbit hole. To answer your question, the point is what Trump is trying to do is really big. It's not just about tariff fairness or international trade. And the maybe most positive way of looking at this is if you look at what he's trying to do, this reindustrialization, it all seems to focus on what our friend Doomberg likes to call military adjacent industries. So you want to make tanks, you need auto industries. Obviously you can't depend on your greatest geopolitical adversary to make your military gear and kit. That makes no sense. So it looks like, my way of looking at this is it's not just an America first agenda. It's a fortress America first agenda. And if you look at it through that lens, as all the crazy things that you hear coming out of the White House, it actually all kind of makes sense. It all fits in this pattern. And it's worth, if you believe that, especially if you believe that conflict with China is inevitable, or maybe even, Putin reassembles the USSR and becomes a bigger threat in the future. If you believe these are real threats, then it kind of makes sense that you want to look at the trouble the Europeans are having now because they kind of disarmed and disbanded their defense industries, and now they're scrambling to reassemble their capacity. You don't want to be in that boat when there's a shooting war right on your doorstep. Fortunately, we have oceans on either side, so we have a little bit of time here. But I think this is the real agenda. I don't know. I'm just a guy here, just a due diligence guy. But it seems to me that this is the real agenda, and this is huge. And if that's really what you're after, you're willing to take a fair amount of economic pain. Because it's not really about, creating those old blue collar jobs of the 50s. It's about building Fortress America and protecting it for the next century. And now whether the public will go along with that is another question. And hence the Trump shock, because, this is going to put America, to change something so dramatically is a really big, big deal. And I think this goes back to, something as huge as Nixon shock. When Nixon took, nowadays people, younger generations don't even remember or know, but to sever the dollar from gold, if a young person looks at that, oh, the gold standard, that's archaic, it made sense. We have, digital gold now. So why did we even need that gold standard thing? That was ancient. But at the time, gold was money, and the dollar was only accepted and became the world reserve currency, the Bretton Woods Accord and all that stuff, because it was supposed to be as good as gold. And because you could, if you were a central bank from another country, you could redeem your dollars for gold. So it was really just a more convenient way of continuing the gold standard. So for Nixon to slam the gold window shut on that Nixon shock, it didn't just change the nature of the US economy, it changed the whole global economy, the whole world order changed. And you look at all these charts from inflation to money supply to all kinds of derivatives and things, and they all go nutso after 1971 when Nixon did this. And anybody who cares to look can see the magnitude of Nixon shock. And here's the warning. Here's the red pill, right? If I'm right, if this is what Trump is trying to do, it's on that order. Like even the end of the Cold War and the peace dividend and the globalization, those are big changes, and they had, large economic impacts, but it was sort of continuing the existing trends. The peace dividend just turbocharged what was already happening. Whereas for Trump to try to reindustrialize the United States, to change the basis of its economy is in my mind similar in magnitude to what Nixon did. And therefore the consequences, the bumps on the road, are going to be major, even if we assume success.
Uranium and gold topped the best performing commodities and metals during 2023, and the 2024 rally could extend itself through 2025. Over the past 26 years, gold has made higher lows and higher highs, experiencing periodic corrections. Even the most aggressive bull markets rarely move in straight lines. If we are indeed entering a new economic regime, how can investors best position themselves, particularly in terms of hard assets such as gold and uranium? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.